Welcome traders to another YouTube live here. Going to be going over the many different assets within the financial markets. We saw the commodities and Bitcoin move up quite significantly here. The front runner of that move was actually Bitcoin pushing up on the 19th, basically starting at like 1 a.m. And then silver moved soon after, kind of starting in the middle of the day yesterday. And then gold pushed up last night. Pushing up not significantly, but the break in the descending trend line is pretty significant nonetheless. So we're going to try to build this relationship with gold, silver, and Bitcoin. Now, as of right now, since kind of the 2020 recession started, I've been really trying to understand the correlation in the relationship of the commodities and Bitcoin. And there are some instances where, yes, they do have some level of correlation, but day to day, it's not as correlated as one might think. Yes, there are times when kind of things go up. Like, for example, S&P really didn't go up, and a lot of these stocks didn't really go up either, whereas gold went up. Silver's actually doing pretty well. And BTC obviously made a strong move to the upside around the $5,500 zone all the way up to the 65, so about $1,000 increase. So, I'll keep looking at the correlation, but at the end of the day, I think the bigger outlook does seem a little bit more correlated, but in terms of the everyday trading, definitely not as correlated as one might think. So if you are trading, definitely don't use the gold and silver data as your main source of which way the macro trend is going, or even the smaller short-term trend. Kind of trade them separately, understand which way both of the assets are going, but they're not directly correlated from what I've seen so far. Let's go to gold first, and then do the commodities, and then start off with the rest of the time frames here. So this is gold. We basically talk about this every single day. Descending trend line, broke above, made a new structural higher high. We saw a... Why is my thing not showing there? Favorites. Give me one moment here. I thought I had favorites. I don't exactly know where. I forget where the favorites are. I'm looking for this thing right here. But on here. I don't. Oh, it's right here. It vanished on me. Okay, so basically, let's get our arrow. We were holding this higher low section, and we were squeezing from the horizontal level of support right here, and this was the apex. We got really, really close to the apex, as we can see. Pushed the upside, broke a minor level of resistance around here. Now testing as a new level of support. We'll see if it holds. Got around 39 minutes on this 1 hour candle. So obviously we're not going to have that bias that it has broke until we actually see it crack below the zone. Next level of resistance is going to be on 55 or 1550. So we'll see where it goes. It's a pretty well-respected overall structure. If we break this zone, next zone is going to be around here, as we can see. But right now, we're pretty happy with where our current zone is. As you can see, it's a key level of both. Support, 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 resistance, resistance, resistance. Break above, testing previous level of resistance as a new level of support. And then we could see a bit of a pushback up to around the 1550-ish zone. And then looking on the 4 hour, why is that zone an important area of significance? We can see resistance and support all along here, right? So initially it was a resistance, tested, came back down, broke, tested as a support, and then smashed right back below the zone. And now we could come back and test the zone as another level of resistance. We've already have once before, so it wouldn't be surprising if we get back to this level. If we do, could be a nice little double bottom with a pullback here. I don't know if we're gonna have a strong pullback all the way to a key zone, but if we do push above the double bottom, the next area of resistance is going to be around the $1,600 level, as we can see right here. So if we get above that zone, this is going to be the next area that we're going to be looking for some level of reaction, but we'll see how this current couple days goes here. We don't want to say that it's going to come back down. Because it did break market structure, everything looks good. We also see a decent amount of buy volume here on the pullback. But when you're actually making this strong move to the upside, you're not seeing much buy volume. You're actually seeing a lot of sell volume here coming in when it does pull back, which is not ideal for the long side, but we'll see how it goes. Still looking bullish as long as it's holding above the 1450, 1460 zone. If it breaks below the 1460 zone, then the market structure to the downside is broken. Made a lower low, looking for a lower high for continuation to the downside. Potential confluence zone around the 1460 zone right around here. So that's gold. You know, it's in consolidation. My bias is more of a consolidation more than a downtrend. And if we are able to hold above the 1480 zone, that would be more bullish because we're able to hold the previous resistance as a new level of support. If we get down to this level, basically I'd be looking for some level of a descending trend line. If it's able to break that zone and break the mid-range 1485 level, that would give you more confluence and conviction. Like if we got the price to come here and then pulled back here, then I'd be looking for a potential opportunity. But at this point in time, if it comes down to here, I think more patience is needed until we get a bit of a squeeze here. So we'll see how it goes, but that's my overall outlook for gold. Already talked about a potential move to the upside yesterday, and that happened, and not a whole lot more has been taking place from that point onwards. So we'll keep everyone updated, but there's not a whole lot to discuss in terms of the price action for gold, in my personal opinion. I'm not gonna keep this here. I'll leave that there if we get one more touch, but with how it is right now, I'm not really interested. Not seeing a lot of sell volume here on the push down, but got 5 minutes, a little over 5 minutes on this 15-minute. Also, this is very off. I'm a little happier with that. Okay, so that's gold. Not going to discuss it too much. Yeah, we'll see the correlation. I've been really trying to understand the correlation between BTC and gold here. And I've been trading less because of it, because I've been trying to line up multiple assets to come to a single kind of confluence where they're both looking short or both looking long. And I've been taking a little bit less trades because of that. But during these volatile times, I'd rather be safe than sorry, and having my money in US Tether, which is basically the US dollar, which is the best asset class to be currently in at this very moment, is not necessarily a bad thing. Basically every other fiat currency and asset, gold, silver, every single equity except for inverses, or like if you're shorting, you're going to be losing money at this point. So not a bad position to be in right now. Cash, being patient, sitting on the sidelines is not a bad thing during these very volatile times, and then being able to kind of act when the time is right is important as well. And I'm not talking these like 10-15% moves. I'm talking like when Bitcoin fucking pumps like 2, 3, 4, 5, 600%. Like that is the outcome I'm looking for, not these 10%. Oh, I missed 10%. How could I have missed 10%? Like that's, in the grand scheme of things, completely meaningless if you miss a trade. One trade, you should not worry about it at all. Like if people tell me, oh, I've been missing trades, like, fuck, that's, you're learning. You're seeing the opportunity come in, and you're not taking it, but you're still seeing the opportunity come in, and that's a lesson, right? So it's important to understand that you can't force trades. It is, well, especially kind of, not for me, but when people ask me, like there's a lot of people who ask me, what trades should I be in, what trades should I be in, and it's challenging to keep on telling them that I'm not in any trades, because they think that, you know, traders should be trading every single day of their life, every moment of their life. And if I'm not in a trade, it just seems like the world is ending to some people, which I don't think is very good. But we do the best we can with trying to present people with information that actually shows them what it is to be a trader. We're not in a trade consistently 24 hours a day, 365 days a year. We're in a trade maybe, it's pretty hard to like ballpark, once a day, once every other day. Swing trade, longer term day trade, something around there. But we don't have to be in a trade every single day of our lives, every waking hour of our lives. It just doesn't make sense. Just wanted to clarify that. Now going on to silver. We have been squeezing out of this accumulation phase right here, holding that nice level of support. Broke to the upside, strong level, making a higher high. Now we're making a higher low on a previous level of support and resistance, as we can see right here. It's not perfect, but we can see it was a previous level of resistance and support. So it was a resistance, support, support, resistance, 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 and it's probably going to be another support level right around here. We could extend it to a little bit bigger, like so. I think that might be the best case, but I'm going to refine it just a little bit, keep it up there, and then see how it goes. And then we got our ascending zone that is connecting the higher lows, like so. And then let's get that like so. So that's our trade for, or that's our outlook for silver. We'll see how it goes, but it's looking pretty bullish in my personal view. Broke market structure, made a new higher high, broke price action, volume looks solid. So overall, yeah, it's looking pretty good. And this is probably going to be the same direction as gold. So if gold pushes up and holds this level of support, currently is not right now, but we'll see. Silver is probably going to hold this level of support and break up to the $13.20-ish range. So they're probably going to be in confluence with each other. We'll see how it goes. But that's basically my analysis for commodities here. I'm not really trading them right now. I'm just patiently waiting for the move to occur. So basically, I'm speculating that gold and silver are going to appreciate very, very significantly in 2020 and 2021. That's my speculation. I'm going to be trading assets involving commodities in the equity sector, and I'm patiently waiting for that. And I think Bitcoin will do the same. So I'm not really trading a whole lot right now. Like I am going to trade some just with ETFs, but at the end of the day, I'm not really looking to size up or look heavy or to leverage until we start to see the momentum from the retail investor side get interested in commodities, which I think will happen. It's just a matter of time. And with QEs happening with not just US, but globally, I think that cash is not a bad place to be sitting right now, but in the long run, obviously, inflation will eat you up alive. Not going to talk about the gold and silver. Nothing really happened. In terms of U.S. oil, we got a solid bounce, came back around the $24 range. So we're getting a nice bounce, nice reaction around 22. Like I said, the descending support zone is going to be a level of sensitivity that we're going to interact with here. So that is the commodities section. Basically going to leave it at that. Get a little bit of coffee here. And then next thing on our list is going to be the indexes. And then we'll get into the news related topics to cryptocurrencies. I know it wasn't directly the same schedule as every other time, but why not switch it up a little bit? The news topics that we do cover are mainly associated with cryptocurrencies anyway. So this is the S&P 500, the largest 500 companies in the United States. Obviously, we're making a clear downtrend, making lower highs and lower lows. I do think that we are in a bit of a consolidation. So we are holding this descending trend line. We are holding this descending support. We are also holding this counter trend ascending trend line that's holding the price from making higher lows, squeezing the price towards the apex of the pattern around 2,400. Price has to make a decision. If it does break to the downside, I do expect a pretty significant drop here to our lower low, probably around 6%. So that's going to be a phenomenal trade for anyone who is looking to trade the S&P or SPY or SPX or any index or instrument that is able to trade the S&P. So that is going to be the potential trade that we're going to be looking out for in terms of kind of an intraday move, because as we can see, support, 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 support. It's coming back for a retest. This could look like a pretty phenomenal short in my personal opinion. Let's just see how the risk rewards are looking. Risk is a little high on that one. Let's just see where gold, it held. That's pretty good. Risk is a little high on that one. I think I would rather reduce risk a little bit. Let's just look here. Just doing some math here. Take profit level is going to be this area of support right over here. You could stagger your take profits kind of like so. Oops, that didn't click. My mouse is, come on. I gotta change my batteries here. Give me 1 moment. Or just push them in a little bit closer so it recognizes. There we go. Okay, so that's going to be kind of the structure of the take profits. Looking at risk rewards, if you're going to risk just putting your stop loss above the mid-range level of support and resistance, looking around 2.15 of a risk, and you're looking at maybe 5, 4.5, or even 3.5 level of reward. Obviously, 2 to 1 would kind of be the ideal you're looking for, so like around there would kind of be your minimum. Ideally, in an ideal situation, around there, I guess. Maybe not perfect, but pretty close. And that would be your second take profit. So we'll see where it goes. In terms of the overall structure on the long-term time frame, it does look pretty good. It looks like a pretty good probability. We're just grinding down, making lower lows and lower highs. We've just broken a horizontal zone. We just rejected pretty hard off a major level of resistance, like so. Rejection, we did poke above. A little bit of a fake out for the buyers. I'm sure some people did buy at that zone. And then when we came back aggressively because all the longs, all the buyers, I'm sure got faked out there. And then when we came back, stop losses were hit. Aggressive move to the downside, pullback, and now we're making our second push to the downside. It's just a matter of if we're going to continue that push to the downside. So we'll see where this goes. It does look a little bit interesting. We want a couple indications that they're going to be sell pressure within the market. So just looking at the horizontal zones like so, that's going to be a potential area where the seller is going to be located, and then we could reduce our risk a little bit more, giving us a really good risk-reward parameter. So we'll see how it goes. That's looking like a pretty decent setup, but at the end of the day, we will want to have 2 injections of sell pressure coming into the market around here, and we'll want to see if there's no demands, how strong the sell volume is, and kind of just assess it as the time goes on. All right. So the next thing we're going to be looking at just quickly is going to be the US dollar, the dollar index. Really strong volume, obviously, on the weekly. Got around 6 hours till the close here, closing at the level of resistance. But overall, really strong, making sense. A lot of people are getting liquidated. A lot of people are selling their positions to get into the US dollar, and makes sense that it's very strong right now. All right, so we're going to go into the news topics here, kind of midway through, because in this video, we're mainly just talking about news topics regarding crypto, not really revolving global macro or any longer-term macro outlook, really. Quickly, just looking at where we're getting our news, we always get it from our Discord. You have news topics that get instantly posted every single day, anything involving cryptocurrencies. So it's a great way for you to stay updated on any fundamental factors that are coming into play for absolutely free. So our first one is going to be the decoupling. Bitcoin price up 40% since last week. Stocks not so much. So this is basically just going over how Bitcoin has been increasing substantially compared to stocks. But, you know, in my personal view, we'll get into it right now, but like a lot of people are saying, oh my god, the Bitcoin bull run has started. Like, look at the long-term time frame. We just dropped over 50%. And yes, we did we did gain back 50%, but let's say you drop 50% back in value from 10K to 5K. Well, you need to go 100% to go back to your original position. So moving 50%, yeah, that's super bullish. Going from, 4K to 7K almost is a significant move, but we'll look at the long-term time frame. We'll look at the weekly, but I just don't think that we're in a massive epic bull run just yet. There's a lot of consolidation, I think, that we still have to go through. I think that the recession, the economic downturn is still early. It's going to get worse before it gets better, and that is deflationary for most assets. If we look at the weekly chart for gold, even at the midway when we're at kind of at the worst of the recession back in 2008, you're not seeing gold break all-time highs, making massive bullish pushes until kind of the end of the recession, until the worst pain has been felt. Then investors go to gold and silver. But at the beginning, there's still hope. People think there's going to be a rebound after the coronavirus. I don't think so at all. I think that the government will have to continue to pay for, the American people through just universal basic income, paying a monthly, bi-weekly basis of $1,000, $1,500, whatever the case may be. They're going to have to continue doing that because I don't think the economy will just jump right back on its feet and continue operation like it was previously. The economy was already in bad shape before Corona, and now that the economy is in lockdown, it's just total catastrophe. And I don't think that the economy is just going to bounce back and it's going to be healthy as ever. I just don't think that's going to happen. So I think that the devaluation of stocks, most all asset prices, gold, silver, crypto, will go down further, and the US dollar will go up more until everyone is US dollar heavy, and then the inflation will start. Because not always, but usually markets will hurt the most amount of people. And when everyone is US dollar heavy, I think that is when the shift will start. And then you see a massive, massive flood from the US dollar into precious metals and crypto. That's my speculation overall. So we'll see how it goes. But that's kind of how I view the markets at this point in time. A little bit of a caution for people who might not be, who might be new to the cryptocurrency space. There's a ton of scammers in cryptocurrencies. Send me 1 Bitcoin, I'll send you 5. That kind of bullshit. Please don't fall for it. If you are going to donate anything for COVID-19, make sure it is a legitimate website. Go on to the World Health Organization's official website and ask them. Don't try anything. Don't go anywhere that you think is sketchy. No one's going to reach out to you to donate. Just remember that. No one's going to reach out to you. No account manager is going to reach out to you and say, hey, I can make you rich. They're just trying to take your money, right? So you got to understand, to be safe, to always, always, always have your, highest amount of caution up all the time, and be aware that there are individuals out there who are trying to take your money for the sole purpose of being scammers. So definitely keep that in mind. Next thing we're going to be talking about is Italian banks open Bitcoin trading to 1.2 million during lockdown. So Italian banks are currently locked down, obviously because of COVID-19. There are massive repercussions about that. We can just see that growing adoption for the COVID-19 outbreak have encouraged Italy's Banco Stella to launch a Bitcoin trading service. So it's crazy to see that when economies are in turmoil, even banks and governments are turning to cryptocurrencies to try to give people some sense of not freedom, but if banks are locked down, you can't do anything. You can't exchange assets or funds or value, right? If the stock markets are closed, if banks are closed, you're wrecked. If all your assets, if all your money is in banks and is in a brokerage account, and you have not much money in physical assets that you can hold, cryptocurrency not really being one of them, you can't hold it, but I can hold my ledger and no one has access to it other than me. I can open it whenever I want, like as long as I have a computer, or not even a computer, as long as I have my seed words, I can access my funds. Whereas if you have a bank, you might not be able to access it. India just announced that they can only, the 4th largest bank in India, you're only allowed to take out $700 US in a particular time frame. And then you're seeing Italian banks shut down now. So it's not unheard of. You're seeing major countries, like not super corrupt countries like, Venezuela had their hyperinflation, but obviously it's a very corrupt country. Italy is a very solid country, right? There's no major corruption in Italy, and you're still seeing the economy falter, and you're still seeing banks not be able to provide services for their customers. So it's something to be cautious of, at least, just to keep in mind, right? Last thing, a little bit of fundamental news. Tether launches on Bitcoin Cash network. Bitcoin Cash saw a pretty good jump from it. Tether has seen a surge of interest in recent weeks due to the global flight to safe haven assets, and it has a market cap greater than $5.7 billion. That's huge. More than 180 million was minted in recent days, predicting Bitcoin's remarkable price spike in the last 24 hours. Important thing is Bitcoin Cash has its own generic token called the Simple Ledger Protocol, which BTC's version of the ERC token. Just looking at the actual network for Tether and Bitcoin Cash. I think I should highlight these. I've seen people highlight them before, and I think that might be easier for people to read. But at the end of the day, this is what Roger Ver said. It's extremely exciting to hear that the world's biggest stablecoin will be using the Bitcoin Cash blockchain, and the millions of Bitcoin.com wallet holders will be able to send and receive Tether using SLP tokens. So very interesting to see. And that is the cryptocurrency news of the day. And like I said, you can get them all with our news section right here within our cryptocurrency discussions within our Discord. Absolutely free. It will post basically every single news story relevant to cryptocurrency, so you can stay up to date with what's happening. Now that we went over commodities and these equities / indexes, basically S&P, we're going to now go over the cryptocurrency market. Also, if you have any questions, we've got 4 people on our YouTube live. Just ask if you have any questions. So in this one, we're going to start off with the larger time frames and then work downwards. The monthly we haven't talked about in a week or at least a handful of days. And we'll talk about that. We obviously got a decent amount of buy volume, so we're seeing a retracement in the monthly, which is super exciting because we're seeing the price come back all the way to a potential very significant level here. We got the 50-day, which isn't too important, but the main area I was looking for the price to hold was around where the price is, where the price is currently right now. So right around here. Why is that? Horizontal level around right here. We could go a little bit lower, we could go a little bit higher, but somewhere around there. And we also see that ascending curved green support zone. That is going to be a major level where buyers are going to be located. Now, in that said, if it does hold there, oh shit, I don't know what happened there. I can move this just a little bit so it fits. I don't mind smudging it. I'm not going to be married to this exact trend line. I can move it around, but all I know there's going to be some level of buyers around here, and that's exactly what we got. Good to see on the monthly. We still got 11 days left, but you know, it is good seeing that pullback, but it's not uncommon to see a major candle to the downside. And then the continuation. We saw a candle here. Next leg down. Candle to the downside. We got it to close. This candle didn't close, so it came all the way down. It inevitably did, I guess, when we got the bear market, but just looking for monthly candles that look similar to this in terms of a long wick to the downside. We don't see that much. We see this one right here, and the next candle was very bearish, but then that was off of the massive 2017 bull run, so obviously that makes sense. This is a lot less bearish momentum compared to what we saw at the start of 2018, so something to consider, something to understand. But in terms of the rest of the candles here, we're not seeing that much. There's another wick down here. We never closed it. That candle closure was actually the low for that consolidation. And I think we don't really want to use any of these because the market was so immature compared to how it is right now. The closer the data is to the present, the better. So we'll see how it goes. We'll see how it reacts. But if it does close around where we are now, super solid in terms of a candle closure. That doesn't mean that we're going to actually hold that level, but it just shows us how significant that zone is. The weeklies, we're going to have a lot of discussion on the weekly because a lot of people are saying, oh my god, the bull run's here. Buy all your sats now. 20K next. Like crazy shit I'm seeing. Look at where the fucking weekly is. I just don't understand why people think that the bull run is imminent. We got an anchor point right here. This is the weekly, remember. We got 2 descending trend lines. We got our first touch, which is just going to be the wicks right here. And then you have the main one, which is going to be candle closures, body closures, wicks right here. And then you get another touch right here. And then you get another touch right here. So that the more descending zone is going to be the more valid area. And then the second one that's higher is just going to be the outline of the zone. So the main descending zone we're going to watch is going to be around right around here. So that's our lower highs we're connecting. here, 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 here. We're probably going to have some level of resistance around here. Knowing that, right? So that's our resistance for our support. Anchor point right here. 1, 2. And then we got a major support level that held right around here in confluence with our descending zone and our horizontal zone. So yeah, we got a decent amount of buy pressure right around there. Makes sense that we got the bullish push. So that's currently where we are right now in terms of the larger time frame. So this is our area of ascending support, and this is descending support. So right now, where are we? We're in a major symmetrical triangle, right? Huge. It's going to take months to actually break out of it. Like, it even looks like it could go up to 2021 until we start really seeing a huge break here. But at the end of the day, we're in a massive triangle. So to say that we're in a huge bullish push, we're in a massive bull run imminent, just doesn't make sense. Because even where we are right now, with the 50% move, we're still underneath our mid-range consolidation zone right here, as we can see. Not perfect, but we're in a mid-range consolidation zone, as we can see, right? So even if we don't get up here, $7,800 zone is going to be a major level that we're going to be holding under. So right now, in my view, this is what we're going to be looking for. Just consolidation from the lower highs and the higher lows. So for me to say, oh, the bull run's imminent, just doesn't make sense. We have a long time before that could come into fruition. Now, in the long term, yeah, I do think that the bull run is imminent. I do think that we're going to have a strong push to the upside. But it's going to be after this breaks, this massive symmetrical triangle. I'm expecting this to break, and then we're going to get a strong push to the upside. And it seems large right now, but let's look at it on the larger time frames. Let's zoom out. It's not going to look that aggressive, right? It doesn't look that aggressive. That looks, if you were on a 15-hour time frame, that looks like a pretty solid pattern. Strong move to the upside, nice pullback, still seeing those higher lows, still seeing the lower highs, squeezing towards the apex. The worst case scenario, this triangle is going to be consolidating until basically 2021 is where the apex is going to be. And I don't know if we're going to break it, if we're going to make it there. But for like the major macro view, this is how I'm viewing the market. So, it could, from this point, it could still pump 40%. So it could have gone up 100%. And I'm still not macro bullish on it. Why is that? Because of this descending resistance. Like, a lot of people look at such small time frames. And yes, a 50% move is massive. If you're risking, let's say, 5%, that's a 10% move, right? If you're risking 1% off of a 5% risk, or whatever your risk reward parameters are, if you're making 50% and if you're initially risking 5%, 10%, 3%, that's a huge fucking move, right? So we're going to be looking for those. Obviously, we didn't catch the lows here because we were waiting for that support. To me, I would rather wait in a massive bearish move to the downside than basically gamble. When you see lots of volatility, you don't really know which way the direction is going to go, but you're just kind of like hoping it's going to go one way without really having a setup. That's gambling. That's not having a system and a setup. That's not how we trade. So we're looking for a good setup, right? Right now, what do we see? Let's actually take a picture here because this is very important. So right now, we're at a level of support. We got lots of confluence at a level of support. So we know that if we do come back to the 42-ish $100 level, going to be a strong level of support, right? But we have to see it consolidate because we see wicks go way below the zone, but we see it close at that area, right? And also, knowing where the higher lows are, if we do get a dump back down, there's a high likely chance that it'll have some reaction before it's going to break this zone. So if we are looking for shorts around this zone, we're probably going to be looking for take profits when we're going to form at that same low. Just makes sense, right? So we're going to have to make sure that our risk reward is in a position that is able to capitalize from a move up top there to down there if we are looking to short, right? From here to here. That's a short opportunity. For a long, we're still underneath our zone. I'd want to see the price clearly break this zone and then pull back. Because right now we just made a strong move because we made a downtrend, right? So let's say this is a downtrend, and we hit this zone. This right here is a correction. Impulse, correction. Push, exhaustion, right? So we're in an exhaustion phase. Ideally, we want to enter at the completion of exhaustion. So we did enter a short. It did pop up a little bit higher than expected, so we got out of the trade. And we could be looking for another entry here, but we'll look at the smaller time frames. I haven't really seen the smaller time frames yet, so we'll see how it goes. But in my personal macro outlook, that's how I'm viewing the market. I'm not looking at the market as a bull run is imminent. I'm not looking at the market thinking, oh my God, I need to get that $4,600 for one Bitcoin. I gotta get it. I don't care if it goes below that. Like a lot of people, like, it's hard to explain for people who have no idea, but investing and trading is so different. Like, if you're investing, you're just $1 cost average at the lows. It just makes sense, right? And if it goes lower, that sucks. That's investing. Have a risk management strategy, and you're fine. But you're not looking for a probabilistic setup, and if you don't see it, you're just not going to enter. Even if the price dumps 90%. If I don't see my personal setup, I'm not going to trade. Even if I think that BTC is such a bargain, that I think it's unbelievable. For example, if Bitcoin went to $4,000, as an investor, I might think, holy shit, what a undervalued asset I have to buy. Look how cheap it is. But as a trader, you're not looking at cheap, expensive, overvalued, undervalued. That you throwing all that straight out the window. For me, anyways. If you're combining fundamentals with technicals, that makes sense. But as a trader, you do not give a single shit what the price is, other than psychological zones of supply and demand. But as a trader, if you don't see anything of an actual setup that you are comfortable with having an edge in, you do not trade. Doesn't matter if it dropped 50% and you think it's going to bounce. Doesn't matter if it's in an uptrend and making clear higher highs and higher lows. If your personal setup is not there, you don't do anything. You do fuck all. You sit on your hands and you don't do a single thing until you see the setup that you have an edge in, that you're comfortable with trading, that you've traded 1,000 times before, and that you have a strict, specific set of criteria that you can abide by, that you have a systematic approach to entering and exiting the market. That is when you trade. So when people ask me, is it a good time to buy? Why aren't we buying? It's going up. Why aren't we entering? Why aren't we shorting when it's going down? A, you're a complete noob and you don't really understand the process of finding an opportunity. And B, it just doesn't, you can trade that way if you'd like. And you shouldn't put pressure on other people saying, oh, this isn't a trend. Why am I not entering in this trend up or down? Well, to me, it's not a setup that I like trading. It just is that simple. So, I'm on a pretty big tangent here, but it's a little bit frustrating when people perpetually ask me, why aren't we entering? Why aren't we entering? Why aren't we entering? Well, it's just personal opinion, not something that I have an edge in the market. I just wanted to clear that up because, as we get more people, as kind of people who don't know about trading enter the market, which I think is great, but the two biggest misconceptions, I think, is A, we always win. We never lose. That's a major misconception. Traders lose all the time. Traders can lose 50% of the time and still be very profitable as long as your risk reward is going to be matching that win-loss. Number one. Number two, we don't exactly know what's going to happen in the market. The only thing we can control is our entry, where we enter, and where we get out of the market. The only time we're going to be exposing ourselves to risk is when we have an edge in the market. That's the thing that people don't understand. It's going up. That's an edge. Well, no, it fucking isn't. There's a million other factors that we have to consider, right? So it's a little frustrating. But anyways, I don't want to get into it too much. Let's go into the smaller time frames. Hopefully that didn't take up too much time, but as people get more and more interested in the market, I do see more people asking me, should I buy? Should I sell? I'm not going to tell you that. I'll tell you what I'm trading, but if 100 people ask me when the right time is to buy and sell and gave me their trading plan, I wouldn't be able to sleep, right? And that's not proper trading. You're being a sheep. You're not trying to learn yourself. You're just asking some exterior third-party individual to basically give you no responsibility, so you don't take responsibility, and you're leaving the entire decision up to another person. So then if it does go bad, you don't have to blame yourself. You just blame that person. So it's very easy to do because you don't have to take any responsibility. You just say, oh, XYZ told me to enter, and that's why I did it, and it lost, so it's XYZ's fault. It's not my fault. It's his or her fault. They should be to blame. Well, in fact, if you're placing any trades within the market, it's 100% your responsibility. And it's 100% your choice to risk that money. So just be mindful. Don't be a sheep. Try to understand why we're entering, why we're doing this, why we are looking at a market in a certain way. And that's what we're trying to convey in the videos that we're making. Now to the daily chart. Bit of a pullback here. Not a whole lot to talk about. I think this chart illustrates it in the best possible way. So we're going to talk about the market structure here. Not really going to go on the alts too much today. In my personal opinion, it's a Friday. In my personal opinion, Bitcoin was a little bit overreactive with this move here. I did have a short on, got taken out because of this wick here. Thought that it was going to hold here. It was looking pretty good, but unfortunately it did not. So why did we enter? Anchor point 1, 2, not really a touch there, but we got 3, 4, and then 5, very valid zone. And then we got the descending zone, 1, 2, and then in the previous price action, it was a valid level as well, around the $64,100 zone, creating a level of confluence where there's going to be sell pressure within the market. That's why we entered short around that zone. Once we saw the price action confirmation break the ascending trend line to the downside, that's when we entered. And that's basically the trade that we took yesterday. Now, it's just a matter of if we're going to close here. We got 7 hours until the daily closes here, but it's just a matter of if we close here, well, then we're still within our zone, right? Then we could potentially see the zone continue to the downside, which would then mean that we're going to have a massive, massive opportunity for a short side if it does get presented to us. That's a big if here. If it breaks to the upside, breaks this confluence zone, well, yeah, we might consolidate a little bit more. That's fine, but I'm still short bias. Basically, at the end of the day, like I am looking for more shorts than longs, and that might mean I am missing, some 20-30% moves to the upside. I'm so comfortable with that. I don't mind at all because I know that I don't need to catch this. I don't need to catch every single move. I really don't, right? If you're looking at 10% a month, 7%, 15% a month, you don't need to be trading every single day. You just need 1, 2, 3 solid trades, and you're good. If you're risking 2%, 3, 1%, whatever it is, you just need 3, 4 maybe good trades a month, and you're doing well. Right, so we got to keep that in mind. So we're at a level of resistance. That's basically all I'm kind of going to talk about on the daily chart. We did break that zone, and this is that ascending wedge. Oh, shit. That ascending wedge I was talking about. I'm just going to change my mouse, or fix my mouse batteries here. So this is the ascending wedge. Oh my God, give me one moment here. My batteries are not enjoying it right now. I think I got to... The place to actually put the battery is like loosening, so the battery always gets popped out of the socket basically of where we're trying to put the battery. But anyways, that's not the one I wanted to delete. So this is that wedge that we had drawn. It's very messy here, so I'm going to delete this. I'm going to delete this. Actually, I'm going to keep that because that's our zone. I will delete all of our mid-range zones because we're just trading this, and I don't even need this. I don't even need this. Very, very simple on the 1 hour. Extremely. Right? Because I don't want to complicate things for everyone. I don't want to make it hard to understand. Very, very simple. We had an ascending wedge pattern, broke the higher highs, breaking the resistance. A little bit more bullish, but it could just be, let's look right here, a kind of the final push, right? Strong move. Oh my god. I'm getting a new fucking mouse. Well, I have another one. I should use it. It's wired, though. I like wireless mouses. So we got to push to the downside, right? And then we're getting a pullback. And the last one is an extensive, stronger push, breaking the high. And then we got another one like here. Now, what we're looking for, if it continues, so be it. That's fine, right? Oh my god. There we go. If it continues, so be it. That's fine. But what we're looking for is the opportunity if it breaks to the downside. If it breaks to the downside, I think it's going to be pretty aggressive. What's it going to look like? We're probably going to retest this, this is exactly how it's looking right now, right? We broke it, resistance, new support. That's exactly how our price action is looking right now. So what we're looking for is if it holds this resistance and continues upward, that's fine. I don't mind. We might not be trading it. That's fine. We'll just continue. We might look for some alts, but we're not really looking for that opportunity. What I'm looking for is a potential break of the resistance. That's a first confirmation. That's for me being like, oh, this could be a potential here. When it breaks the confluent zone, which is our horizontal zone, plus our ascending zone. So if it comes down here and breaks here, once it breaks those two zones, then I am looking to be shorting 100%. Because we not only broke the horizontal zone, very significant level, previous level of support, resistance, support, key level, as well as support, confluence zone with area of support right around here. If it breaks, then I'm looking to short. So that's my outlook for BTC. I guess I'm a little bit contrarian at this point because a lot of people are perma-bullish and think that we're going to hit 10K soon. Like, that's fucking crazy shit. You never know, obviously, but just be careful. Don't blindly follow anyone. That's my 2 cents I think I can give. Not a smart choice. You have to look at the chart yourself, make your own decision. Yes, you can 100% take other people's advice in terms of what method they're using and take people's opinion into account when you are thinking about the market. But at the end of the day, it has to be your decision as to why you think you're trading a certain way. And I think people aren't really doing that, which is not ideal. But at the end of the day, everyone trades differently. Everyone has their own way of going about trading, right? So I can't hate on anyone. All I can say is best of luck and stay safe. That's all I can say. So on the 1 hour, we're just basically looking at the price action to see if we're able to create that price action pattern we're looking for. Just in terms of what we're seeing right now, if we just push it down a little bit, easy, nice head and shoulders there if it does come into fruition. If you can't see it, this is the head and shoulders right here. Head and shoulders. So this is the left shoulder, head, right shoulder. Okay, I guess that's not working. It might be the fact that I didn't click properly. So let's try that again. Left shoulder, head, click, click. There we go. Okay. So that is the potential opportunity here, and I do not have I do not know where my tool belt is usually that I have. Okay, that's what I was looking for. So I guess I can't find it on this exact page, which is a little odd because on every single one else I have it. But basically, that's what we're looking for. Initial break of the $6,100 zone is going to be pretty significant, but I think at the end of the day, the final area of support that we would want to see break in order for us to really call it bearish would be this descending zone right around here. Jeez Louise. Jeez Louise. Okay, I'm going to get a new mouse right after this. There we go. Okay, so that's going to be the potential for our trade right around here, right? So we'll see how it goes. But we're looking for something like this. We're not looking for longs. We're not looking for Bitcoin to hit 10K. We're not looking to leverage long 5 times, expecting Bitcoin is going to be the safe haven asset people are going to be diving into right now. That's not, I don't think that's going to how it's going to be playing out. The consolidation is going to be a lot longer than people think. People think instantly, oh my god, everyone's going to be dumping and diving into Bitcoin as soon as the stock market crashes, and it's going to be perfect. There's going to be a perfect shift. I don't think it's going to play. It's going to be messy. It's going to be volatile. It's going to be deflationary for a period of time. People are not going to know what's going to be happening. If just putting your money in gold and silver was as easy as just shifting it over, everyone would be doing it. But there's going to be downturns. There's going to be pullbacks. There's going to be times when they're going to try to shake the weak hands out. And we're trying to play that volatility. But on the macro chart, we have to understand that it'll take time before we're going to be looking very, very bullish. That's basically the end of the day kind of thing. And what I want to say is we're not, people are too bullish. Look at the weekly. Very, very important. Look at the weekly. If it breaks 10K, yeah, that'll be super fucking bullish. But there's a reason for it because it's breaking such a macro chart. But to say on the 1 hour, oh my God, it went up from the 16th, 50%. It must be in a parabolic bull run. Everyone has to buy right now. Like, that is dangerous, dangerous stuff. But hey, if you want to go that route, be my guest. So we'll see how it goes. Head and shoulders. That's going to be the potential play here. BTC longs, we can see that the sellers are definitely weakening a little bit, obviously because of the bullish push coming and squeezing the shorts out. Buyers rejecting off the previous level of support, validating it as a new level of resistance. Not a lot of confidence for the buyers at this very moment, which is not the end of the world, but it's in line with our short bias. That's basically it. In terms of trades, there's not a whole lot. We're holding the same level of ascending support that we've been holding for a while, and our plan is exactly the same. We're going to short when it breaks that zone. BNB looks pretty solid. Ethereum is pretty far away from the zone, but it could still potentially play out. Oops. So that's a potential play. Let's bring that up here. And go like that. EOS is a potential play. Wow, that shot up quite a bit. I was looking at this on the 5-minute chart yesterday because it was a holding very nice tight area of support. I was looking around in there. 9%, that's solid. Nice consolidation. Nice pullback here. But same structure, same pattern. If it does actually pull back on the 5-minute, I did see a nice descending trend line. Could be a little quick scalp here, maybe. Maybe at the top. I don't really want to go too steep here because that's not really a trend line I want to draw. Let's see if I can refine it a little bit. Not really. So I'll have to see if there's a squeeze coming into play, squeezing into the level of support right here. So this is what I'm looking for: a squeeze into the level of support that it held right around here, around $2.26. Price has to make a decision. If it moves to the upside, that's going to be the trade that we're going to be looking for. Ethereum, exact same thing as Bitcoin. EOS is a little bit different. I think it's going to be a little bit more of a long opportunity if the price does make another high, but we'll see. Link, it's not looking too appealing right now, to be honest, in my opinion, at least. Let's just close all this out and get this. So not perfect. I don't really like this at all because of that big push down below the zone. So I'm not really going to be looking at Link because we don't really have a nice, well-respected, well-respected zone. Come on. Okay, I'm not even going to do that. I'll just leave that there. Fuck it. Did Ethereum EOS link? Not a whole. Link's going to go to the very bottom. BNB is an interest. Basically, exact same thing as the Bitcoin and Ethereum and EOS trade. Literally exact same thing. And XRP, yet again, exact same thing. All holding ascending zones of support. Once they break, we're going to be looking to have a short opportunity on these. And that's going to be looking at right there. So yeah, we'll see. XRP looks good. EOS looks good. Ethereum looks good. All of them look good. Actually, XRP probably looks the best out of all of them, in my opinion, because it's kind of closest to the confluence zone right there. And we'll also create another mid-range zone just right here. And then the final zone is going to be probably right around there. And then we're looking for an opportunity to the downside. Potentially, if it's able to consolidate a little bit further, that would be really nice. And then we're able to make that stop loss to the recent high. Might have to reduce that risk. So the risk reward is actually worth the trade. But yeah, that's kind of what we're going to be looking for. Is consolidation. We're at the high of the consolidation, and we're looking to take that consolidation back to the downside. And that's basically the trade. Not going to go too much more into detail because that's just going to kind of drown out the simplification that we have for a lot of these alts that we're going to be looking at. So thank you very much for watching. I hope you enjoyed it. I know it was a little bit of a ramble, but I thought it was a little bit needed with how people are acting right now with, you know, so many people either making a lot of money or losing a lot of money, and people get emotional. You know, they see some people in the stock market make, let's say, 100% on an option call, and then they think, oh shit, I want to make 100%, but they don't understand that that trade, if they lost, they would have lost 100%. So, you know, what kind of risk management is that? Unless you are able to manage risk even in binary options, but in terms of trying to compare your winners to others, it's a recipe for disaster. And yeah, trying to educate proper psychology is probably one of the most challenging things. TA is easy because you can explain it in a visual way. But psychology is very challenging because it's more emotional. It's comparing yourself to others. It's comparing yourself to yourself. It's being nice to yourself. It's being patient. It's being disciplined. It's being in your own bubble. It's being focused on yourself and not others. It's continuously trying to learn while being accepting of failure. There's a lot to do with psychology, and yeah, I'm thinking of even making a new series, like what actually trading is, because there's a lot of individuals who literally have, like, they think it's kind of either a complete lottery or a 100% guarantee that every professional trader will be right 100% of the time, and if they're not, then they're not a professional trader. And there's two, like, major swings. Either you're one or the other when you're starting, or sometimes in the middle, but like mostly you're one or the other. And then you kind of come back to reality. Or people who just think they're going to make $1 million off 1,000. Like, you're like, how fast can I make $1 million? I have $1,000 US right now. What stock should I buy? What? It's crazy. Like, I just don't. Educate yourself. Be financially literate for yourself. Best thing I can give you for advice is just do your own due diligence. Be your own, not teacher, but like be your own motivator to go out and learn it yourself. Don't rely on a person to give you what stock you should buy, to give you what you should do with your money. Go learn it yourself. Go figure it out on your own. It's a long journey. It's a challenging journey, but the rewards and the independence that you will get after is going to be well worth the difficulty of learning and going through the trials and tribulations of not only learning the technicals and trading, but like the emotional side of it. And that just comes through pain and suffering. Ray Dalio has a really good quote. It is pain plus progression, or pain plus reflection equals progress. I don't know why I fucked up there, but pain plus Reflection equals progress. Very, very important. So as a trader, you are going to have failures. You are going to take beatings. You are going to get emotionally the fucking the beat kicked out of you, or whatever that word is. I don't exactly know how that word is used. You're going to get your ass fucking handed to you emotionally, psychologically by the market. Inevitable. It will happen. You go through drawdowns. You will, and when you're starting, you won't follow your plan. You won't be disciplined. You'll lose money, and you will want to punch yourself in the face 100 fucking times. And that will build character. It sucks. It really sucks, because when you're doing it, you just want it to end. You want the suffering to end. You want it to... You just don't want to trade anymore because you're either losing too much money, you are being wrong too many times, your ego is just getting shot on right in the fucking face, and everything is telling you to stop. But that is what's going to separate either you making it or either you being another statistic and going back to a job or some other endeavor that doesn't require you to suffer the things that trading will make you suffer. But at the end of the day, the hill is worth the climb. That's all I can say. Obviously, there's huge benefits with trading, but a lot of people don't talk about the negatives, and this is just me talking about the negatives, because everyone talks about the positives: working from home, working from anywhere, being your own boss, having the ability to have time freedom, financial freedom, not having to go to work every day and having a shit boss fucking tell you what to do. I do whatever the fuck I want. The level of freedom is unimaginable, but then also with that, with responsibility, with freedom, you need to have responsibility. And that's the thing with trading, is it is 100... Like, I lost a trade yesterday on BTC with a short. I was looking for... Actually, let's just go through it. Why not? Like, this is a live, but I'm going to timestamp it, so it's going to be fine. This is the trade that we were looking at. Let's look. Let's go to day trading. So it's right here. It was this ascending zone, like so, in confluence with this break. And I entered at the pullback right around there. And then my stop loss was 635, around there, let's say. And the stop loss was around here. So that's why this is the trade. Now, why did we take this trade? Now, theoretically, you could say, yeah, it didn't break that support. But on the smaller time frame, look at where we are. Or consider on the larger time frame, look at where we are. First off, respecting this zone, 1 top, 2 top. Oh, it's a double top. Wow, that's good to see, right? Second top. You see how little amount of volume we got? We got really no amount of volume. Look at how much volume we got the first time around. I don't know if you can see the volume. There we go. Okay, so we got the first time amount of volume right here. Lots of volume coming into play, right? Strong push to the upside. And then this is our second push, right? So let's just zoom back up here so we're able to see it. And let's get our arrow. First push right here. Strong buy volume. That makes sense, right? Strong to the resistance. And then you see a consolidation. You see it grinding up, squeezing. And it has to make a decision, right? It squeezed. It broke to the upside. Now, this is making a lower low. We're seeing higher low, boom, lower low, right? Instantly, market structure, lower low. On the larger time frames, looking at the 1 hour, yeah, theoretically, this is the lowest low in terms of the consolidation sideways, but we were seeing a squeeze. We made a lower low. What are we looking for? Lower high to validate the previous support as a new level of resistance. Well, this is a resistance turned into support. Now it's going to be a new level of resistance. And then that's basically what we had for our trade. And then we also see there is a lot more sell pressure coming in than buy pressure on the second wave to the upside. So VSA, check mark. It's looking great. We can even see no demand candle right here. The second candle, there is less volume of transactions in this candle than the previous 1, 2, 3, 4, 5, 6, 7, like 15 candles. So that shows that there's a lack of buy pressure, which then the 2 candles after that pushed to the downside, totally making sense. We did get rejected by the support at around 61.30, and then we got supported again, and then we made a move to the upside. So in my personal opinion, this trade was solid. If I had to take this trade over, the only thing I would do is maybe wait for the price to break into this zone here and hold, giving me more of a confirmation of this previous resistance breaking of the major structural zone. But I wrote in my journal, I'm not upset about the entry. I'm pretty happy about the entry. I think that was a pretty good entry in terms of the confluences we had, the story that we were telling. Also, in that same note, this was around the 19th, later half of 19th. Let's just see. Silver was going up, but gold was kind of at the resistance there, kind of at the later half of the 19th. So I was looking at confluences with gold, and gold wasn't really holding, it wasn't breaking above a resistance. So to me, it was an opportunity where we had confluences with the price action, with the VSA, with the market structure, also with other assets within kind of the similar structure of the asset classes in terms of the safe haven asset. That's speculation anyways, but yeah, that is the trade that we took. Turned out to be a loser, but that's what happens. That's okay. We cut our losses. We know exactly how much we're losing whenever we enter a position, and we set hard stop losses. We do not say to ourselves, "Oh, we'll just exit when the price gets to around that level." We'll see. We'll have the trading view app open on our phone like that. That does not fly for me, anyways. I like to have a stop loss. I like to ensure that even if I'm gonna go take a piss, go make some lunch, go for a walk, I don't have to worry. I know I'm gonna get filled. And this is the scary thing with stocks, is you don't know if you're gonna get filled or not with a gap down. With crypto, you do know, unless some major catastrophe happens. Like Link just dropped down instantly, obviously. Things can happen. BitMEX had a similar issue. But at the end of the day, that's why I like 24-hour markets. So hopefully you got something out of this. Hopefully you were able to get some value. But I'll let everyone know if we are looking to short the market or if we're looking to long. But at this point in time, I just don't see any longs as a potential. SP looks like a potential here, but at the end of the day, we're not really going to be looking at that right now. So thank you very much for watching, everyone who did. If you have any questions, drop them in the comments. And until next time, happy trading.